Mixed signals across assets today. Let us cut through the noise and focus on what matters most. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for July 28th. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.14, losing 0.01% on the session. The world's most traded pair is driven by ECB versus Fed rate differentials. The move in the dollar reflects reports that Indian rupee climbs to two-week high as RBI intervention, falling oil prices spark dollar sell-off to Kedia. Pound sterling to US dollar is trading at 1.33, losing 0.16% on the session. Sterling is highly sensitive to UK inflation data and Bank of England rate guidance. Investor sentiment is being shaped by NASDAQ 100, oil break lifts tech stocks before Fed and megacap earnings test FTSE empire. US dollar to Japanese yen is trading at 163.61, gaining 0% on the session. Dollar yen tracks the US-Japan rate differential and Bank of Japan intervention risk. Equity markets are responding to reports that Trump's tariffs, Fed minutes, rumbles Bitcoin by what's moving markets. USD SGD is trading at 0.7757, gaining 0% on the session. The Singapore dollar reflects Asian FX sentiment, trade flows, and MAS monetary policy. The move in the dollar reflects reports that Indian rupee climbs to two-week high as RBI intervention, falling oil prices spark dollar sell-off to Kedia. Australian dollar to US dollar is trading at 0.6994, gaining 0.39% on the session. The Aussie dollar closely tracks commodity prices, especially iron ore, and Chinese growth signals. Investor sentiment is being shaped by NASDAQ 100, oil break lifts tech stocks before Fed and megacap earnings test FTSE empire. US dollar to Chinese yuan is trading at 0.1481, gaining 0.27% on the session. The onshore yuan reflects PBOC daily fixings, US-China trade dynamics, and capital flow controls. Equity markets are responding to reports that Trump's tariffs, Fed minutes, rumbles Bitcoin by what's moving markets. US dollar to Indian rupee is trading at 95.90, losing 1.01% on the session. The Indian rupee tracks RBI monetary policy, FII and FPI capital flows, and US-India interest rate differentials. The move in the dollar reflects reports that Indian rupee climbs to two-week high as RBI intervention, falling oil prices spark dollar sell-off to Kedia. Now let us look at the macro forces behind today's currency moves. On the geopolitical front, traders are reacting to news that NASDAQ, S&P 500 edge lower as tech stocks drop. Focus on Mideast conflict, MarketScreener.com. This is adding a risk premium across energy markets and supporting safe haven demand. Investor sentiment is being shaped by NASDAQ 100, oil break lifts tech stocks before Fed and megacap earnings test FTSE empire. Rate expectations remain the single most powerful macro driver for equities and currencies right now. On the data front, equity markets are responding to reports that Wall Street ends mixed as investors focus on tech earnings. The move in the dollar reflects reports that Indian rupee climbs to two-week high as RBI intervention, falling oil prices spark dollar sell-off to Kedia. Our near-term view on US dollar to Indian rupee. After today's weakness, the $93.02 area is the first meaningful support level to watch for US dollar to Indian rupee. A stabilization there would be the first sign that sellers are losing conviction. This is our analytical view, not investment advice. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Let us close with the key events and catalysts on our radar. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Every morning, before markets open, we break down exactly what is moving and why. If you want that edge every day, subscribe and hit the bell icon. If today's analysis was useful, a like is the best way to support the channel. We genuinely appreciate every single one. We read every comment. Drop your view below. Thanks for watching MTRS_Market Pulse. Nothing here constitutes financial advice. Please conduct your own due diligence. Good luck in the markets, and we will see you in the next video. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.